Hello and welcome to this introductory video for the Ian King Financial Planning Budget Planning Tool, known as the Budget Extender. You will commonly gain access to your personalized budget extender via a link, which we will send to you in an email like this. Once you click on the link, it will open in your regular web browser. To protect your personal information, you will need to log in to gain access to your budget extender. We will supply details of how to do this separately. Once logged in, you will see that there are 5 steps to the budget extender, and you can navigate between the steps by clicking on the numbers across the menu bar. You should note that if you have made any changes within any of the 5 steps, that you should click Save and Continue to move to the next step. The budget extender not only considers in detail your current income and outgoings, but also those under various different scenarios. We will pre-populate your budget extender with details of the scenarios which will be considered within your plan. But we may also consider any combination of scenarios, including retirement, death, and accident or injury. In this example, we have both the current situation and a scenario to consider retirement. So, let's get started and look at each of the 5 steps in more detail. Step 1 considers income. The figures stated are on a monthly basis and are gross, or before tax has been deducted. Start by adding details of your income, by selecting the relevant box and inputting the monetary amount. This can be done for both the current situation and any future scenarios. When you are trying to project what, say, your income will be from a given source in the future, in this case retirement, you have 2 options. The first option is to manually type over the figure in the scenario. In this example, you could add zeros to remove the earned income in retirement. The second option is to change the percentage figure in the equivalent column to the item. So, in the example, you could place a 0 in the percent column to remove Terry's earned income in retirement. You may find using the second approach to be more straightforward, as this carries an additional advantage over the first approach. Namely, if you update the sum in the current situation, then the equivalent figure in the scenario will also be adjusted. If you have manually overwritten the number, this will not change. To illustrate how to add items to the budget extender, let's also say that you had a rental income of £500 per month, which was not already listed. You can simply add this into the tool. As we expect this to continue into retirement, we will leave the percentage column at 100%. Once you are done filling out this section, click Save and Continue. Step 2 considers core expenditures, those expenditures which are likely to continue indefinitely into the future. As you can see, we have some existing expenditures already detailed within the planner. If we wanted to add an additional expense, such as private healthcare, we could do this by adding the details in the additional rows at the bottom of the section. Let's say that we expect the private healthcare of £35 per month now to double in retirement. So, using the same method as in step 1, we simply insert 200 into the percentage column for this item. As another example of how the planner can be used, let's say that in retirement you will only likely have 1 car. The motoring costs at present are split, with individual costs for each of their vehicles, plus some joint costs for insurance and breakdown cover. If we were to say that Teresa's car would be the one given up, we can simply put zeros in the percentage column against each of her existing motoring expenses, and then, for example, put 66% next to the joint car insurance and 50% against the breakdown cover to represent the cost savings achieved by moving down to 1 car. Once you have filled out this section, remember to save before moving to the 3rd section. Step 3 is financial commitments. Financial commitments are in many ways very similar to core expenditures, except that they commonly have a fixed end date. For example, income tax and your mortgage payment. You will see in our example that we expect all of the current financial commitments to end prior to retirement, so we have added zeros in the percentage column to reflect this. You may recall that we added £500 per month rental income for Terry. This will be taxable on him, so we need to adjust the income tax figure for Terry. £378 is the projected tax on Terry's earned income, and after calculating the tax due on the rental income, we realise that we need to add a further £100 per month to this figure. In this instance, we can simply overwrite the existing figure by changing the number to 478 as illustrated. Remember to save before moving on to the next step. Step 4 is discretionary expenditures. These are the finer things in life, but perhaps could be economised in times of financial difficulty. Here you can see some of the common examples of discretionary expenditures. As an example, let's say we wanted to increase the expenditure on holidays in retirement to £5,000 per year. We could use the percentage technique previously explained, but to illustrate another feature of the tool, you can manually overwrite the figure by simply expressing the £5,000 per year on a monthly basis by dividing, typing in 5,000, followed by the divide symbol, then followed by 12, and the tool will do the rest. Let's also say that we want to add £15 per week for hobbies and interests for Terry. We need to convert this to a monthly amount. So all that is needed is to multiply the 15 by the 52 weeks in the year, and then divide by 12 to get a monthly figure. Again, the tool does the work for you. Once you have filled out your expenses, save and move to the next step. Step 5 shows you the totals for both income and expenditures, as well as details of any surplus or shortfall. This is for both the current situation and any extra scenarios. So, in our example, Terry and Teresa currently have an £859 per month surplus in income, but in retirement they will need to top up, in today's terms, their state pensions and rental income by £1,321 to cover all of their likely expenditure commitments. You can select Save and Update to record any final changes before you can select Export PDF Report. This gives you a copy of your budget extender, which you can add to your files or send to us to include within your plan. If you have any issues or problems using the tool, please do not hesitate to get in touch with us on 01332 856 373 or via directly to one of the team or info@iankingfp.co.uk.